What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, and a couple of stocks out there. Break down what's going on with the markets right now and what you should be watching for going into next week. The big event that's coming out, which is going to be CPI and how it may affect the market in my opinion, and also some very important news affecting the stock market. But before I break anything down about all of this information, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks, each worth up to $2,000, and any could be a free Tesla share. The offer ends in just 8 days. Check it out before they run out. With that out of the way, let's get on with the video. Anyways, guys, I want to show you guys what happened this week with my predictions on the market. I was right 5 out of 5 days for the week. And if you don't believe me, I could actually show you on my channel what I was talking about. So this video right here, the pop then drop that I was talking about was my video from Sunday, where I was talking about what I expected for Monday. And then on Monday, SPY was opened right here, 415. We popped to 417, then we dropped right back down as expected. Then this was on Monday, I released a video where I talked about a chop, then a drop. I saw some choppy price action, then a bit of a sell-off. And as you can see, we opened up. We didn't really get much choppy price action, but we did get a sell-off once again. And I recorded this on Monday, and I released the video for the Tuesday day, the price action for Tuesday. And we got this sell-off that happened. And then the real question was, what would happen for the FOMC meeting? Well, I told you guys I was expecting a crazy day. It would all depend on Jerome Powell. But if he didn't mention pause, we would likely see a sell-off. And I thought that the odds did favor that, but I was also going to be very cautious. So I wasn't as confident, but I did tell you we could get a sell-off if Powell did not mention anything about a pause, and that is what he did. And you guys saw the warning early during the FOMC meeting, because during the meeting, Powell said we can't pause. We're not going to guarantee it. The market was still holding up at the time, and then the market also pumped before the meeting after the rate hike. I predicted that, and that ended up happening. And then I told you that if Powell does not announce a pause, we're likely going to get a sell-off. But I wasn't sure. And the moment he made that announcement, I knew we would likely get the sell-off. And that is what happened, which deemed this correct. The market got the sell-off for Wednesday, as I predicted. And then on Wednesday, right, I released this video. This was my video for Thursday. I told you we'd get a bounce, a small bounce, then a crash for Thursday. I said that on Wednesday. And then what happened on Thursday? The market opened up. It actually gapped down to 407, came all the way down to 404. So we basically tanked on Thursday, just as predicted. And then on Thursday, I released this video. I said, squeeze tomorrow. This was for Friday. Today is Friday, right? I predicted on Thursday, which is yesterday, that the market would get a big short squeeze. Why? Because I was looking at the data. The data was telling me that. I was seeing lots of bullish divergences on SPY and the QQQ, a bearish divergence on the VIX, and lo and behold, the VIX came crashing down, like I think it was 15% down the last time I checked it, and SPY is up almost 2%. A lot of people thought the market was going to crash. They started shorting so hard. I was telling you, no, we're probably going to get a bounce, a big bounce. I told you we could see SPY hit at least 410. We ended up going to 412, so we got the squeeze that I was talking about. And I want to just inform you guys that don't trade based off what I say solely, because I'm not a financial planner. I also want to warn you that I'm not always going to be correct. I'm going to make mistakes. I'm a human. I can't get the market predictions right every single day. But most of the time, I do tend to be correct. Most of the time, right? Not always, but most of the time. But I just want to warn you that if I do make a mistake, and when I've been right quite often, let me just first say this. When I'm right quite often, I'm not going to get like 20 comments about people saying, you're right, you're right, you're right. When I make a mistake, it's more likely that I'm going to get a lot of comments saying, this guy is wrong, don't trust him, don't trust him. And that's completely fine. I'm not going to do anything about it. You have the right to have your own opinions. But I just want to let you know that I have proof right here. I'm showing you real proof that these videos have truth behind them. Most of the time, they will give you good insights on what could play out for the markets, and I do my best to be as accurate as possible. I won't always be right, but I really hope that this helps you out when it comes to your trading journey, or if you want to look at an analysis of the markets. And I want to break down what's happening now and why I'm very cautious right now. So we got the big bounce, the squeeze we were looking for. I mean, the market just closed like a second ago. Excuse me, sorry guys. The market closed a second ago, and SPY is now up 1.83% as of right now. This could be adjusted on Webull. It does not give us the perfect close uh, estimates in the very beginning. But what do I see going forward? I want to warn you guys, be careful. Be careful. Yes, we have this gap on SPY around this 415 area. Let me just show you where that is. Around almost 415, we have a gap, right? We have a wide open MACD. There's no sign of this thing tanking, so it's very likely it's going to make an attempt to go up even more. This could be forming an inverse head and shoulders. If that's the case, we could pull back a little bit and get one more bounce, or we could just keep going. In my opinion, it's going to likely fill this gap eventually. Whether we pull back a little bit and then just keep going for it, or if we just keep going, we're likely going to fill this gap very soon. Okay? But I want to warn you, here's why I'm very cautious. I was trading to the upside. I was holding calls. I got them at 404. I also bought more near open. I knew this thing would most likely keep going. Aapl had pretty decent earnings. Aapl defied the odds, and it actually broke a major resistance. So good news, right? But here's the problem. A lot of these tech stocks are at some major resistance zones. And then we're pumping, which is awesome, but it's right before a big event. The big event is CPI. Now, the way the market works is it doesn't solely run based off data. What else affects the markets is manipulation. What these market makers, institutions are trying to do, what they're trying to achieve. I say that because when you look at the data that came out today, the unemployment data was horrible for the markets. Non-farm payrolls, bad. This was hot. Unemployment is still very low. The labor force participation rate was as expected. Why is it bad? Because the Fed wants weaker jobs numbers to bring down inflation. We're not getting it. And yet, the market didn't care. It just kept going. It really didn't care about the macros and the data. It just keeps going. And that's the reason why you're not always making dumb decisions. If you try to short the market saying like this bad news, oh, the unemployment rate is too high, the Fed has to be hawkish. It's not always your fault. And that's why it's so hard to predict this market sometimes. It's very difficult. I'm going to be honest with you. It's a very difficult market to predict sometimes. But a lot of the times, there are going to be other pieces of data that give us a big understanding of the picture. And one of my goals in this channel is to show you this data to help you understand it. Looking at the options chain for SPY, what I told you yesterday was we had almost 1 million puts expiring. Now, considering we had all of these bullish divergences, considering all these different things, here's what Wall Street did. Wall Street knew that we would see earnings decline. Earnings were not the greatest, but they appeared to be great. Why? Because Wall Street intentionally lowered the expectations. It's kind of like how if you want to run a mile in before a period of time, you could set your expectation for 5 minutes. But what if you increase the expectation to like 10 minutes? You're going to seem like the best runner ever if you keep beating the expectations because you raised the bar. Well, in Wall Street's case, they lowered the bar. They're expecting much lower earnings. And now that Apple was easily able to beat them and all these companies could beat them, they make it seem as if, oh, the market's doing great. You know, the companies are doing great. Let's just squeeze the hell out of the markets. That is what their plan is. Why are they doing this? Part of it is because of the options chain. Because so many people, especially retail, are shorting the living daylight out of the markets. So they're going to squeeze them. They're going to destroy them. That's how the market makers do their business. That's how the market makers make money, if anything, right? And the market doesn't care about unemployment data. The market doesn't care about, all the things that Jerome Powell said right now. It just kept going. That's how insane this is. But here's the reason why I'm cautious, though. Like, you might be wondering, won't the market just keep going? It's not going to keep going forever because eventually big catalysts could still move it. They really can. And the market makers know this, and they tend to adjust their strategies based off what's about to happen. Because when you look at the next week on SPY, as of right now, we don't have too many puts expiring, only about 400,000 with the 1.64 put to call ratio. And we actually have very low put to call ratios for Monday through Thursday. It's a little bit higher for Friday, but it's nothing too crazy. But here's the thing, okay? Here's what worries me. If we're pumping this hard, okay, even if we do pump a little more and we see SPY go for the gap fill, there's a problem. And the problem is we're pumping approaching a big event, pumping before like FOMC, pumping before if Apple like pumps insanely hard before earnings. Typically, that's not the best of signs, and we tend to get like rug pulls or even like a bit of a pullback afterwards. Not always, but typically. Apple actually dropped approaching earnings and then it got a big bounce afterwards. But looking at the data, we have CPI next week before the market opens. All right. The expectation is we want to see a decline. We want to see it only at about 4.9%. We want core CPI to be at about 5.6%, so the same as before. Why is this concerning? When you look at gas prices, they're actually up about 18 cents a gallon for the month of April compared to March. There was a slight increase in energy prices. Energy could actually cause CPI to go up because it leads to other things going up. The manufacturing prices also suggested more and more inflationary pressures. And then when you look at the jobs numbers I was talking about earlier, right here, the jobs numbers are strong. This is not good for inflation. Unemployment is lower than expected, 3.4%. How is that good for the Fed's policies? When there are too many people that have jobs, and I hate to say it, but it's the truth, this could lead to more inflation because people keep buying things like crazy. People are not slowing down their spending. Aggregates demand for many things remains hot. The Fed is trying to cause basically a recession. I know they don't like to say it, but that is what they're trying to do. They don't want to admit it though. And the Fed wants more unemployment. Why? Because when people lose their jobs, it's going to bring down inflation. And they have to do it right now because if they don't do it, inflation is going to keep soaring and it's going to become worse and worse and worse for everyone. That's a bigger issue for the long term. So looking at the manufacturing prices and other pieces of data, we might get a hot CPI or something that's very close to expectations. And that's why I'm super, super careful. I'm seeing us either pulling back a little bit and then trying to continue to go, or we might just keep going if it just keeps going, because once again, there's not really much of an argument for a big pullback. The market was just very strong with little to no red candles, just a couple of red candles. Everything else was just looking bullish. We're likely going to fill this gap up here to 415 or so, maybe a little bit higher. And when that happens, if it does it right before CPI, I'm going to be very careful. Because during CPI, if it's a little bit hot, we're going to get a big rug pull. We're going to fill this gap down here. We also have more gaps below on SPY into like the 390s. We could see the market come down for a very healthy pullback. It is due for that. And also you have to remember, historically, May tends to be a weak month for the markets because there's a saying that goes sell in May, go away. I'd be very careful. So that's what I'm thinking is going to happen. Either we form this like inverse head and shoulders, maybe we have to form the right shoulder and keep going, or maybe we just skip the right shoulder, get a very tiny pullback, and we just keep going. Just keep going, and then we fill this gap, 415 or so. And then we're going to see a huge reaction to CPI. My best prediction would be, since we are pumping this hard and we are seeing some signals of a hot CPI, we might get a rug pull starting Wednesday. But we could pump more into the rug pull. That's what I think is the most likely possibility. Now, I'm going to talk about just a couple of tickers, but not too many. I'm going to save them for Sunday. Tesla did exactly what I predicted. I told you Tesla's getting tight. We're likely going to see this thing retest 166. And I told you if it breaks 166, which it did in the first hour of the day, it hit 167. That was your signal. I told you it's going to fly to 170. What did Tesla do? It flew to 170, exactly as predicted. The next resistance is around, the next major resistance besides 170 is going to be around 173. Make sure you watch the 1 hour 200 EMA. And Coinbase, I told you guys this thing would likely get a bounce. This was actually a few days ago. I told you I was expecting this thing to get a really big bounce off earnings. I said that 2 days ago or so, and this thing bounced all the way back to 58. 58, very, very awesome. The dollar is just flat, not really doing anything. And I was telling you, I don't trust this as a breakout for the dollar. The dollar is just pretty flat. It gave the market hope for a bounce. Nothing much was going on. Now, I also want to note, I forgot to mention this, that SPY has I think it had a bearish divergence. I'll have to double check that. I saw it somewhere here. It may have invalidated it, but if it does develop this bearish divergence, it could just be developing. There's no guarantee it's going to last. So it does technically have one right here that developed. There's a bearish divergence that's developing. That does not mean it has to like crash immediately. It could be forming like a cup and handle like formation and just get one more push up from there. I could be seeing that. That also aligns with the possible inverse head and shoulders scenario. So, like I said, it might pull back a little bit, then just try to keep going. Fill the gap up here around this 415 area. Maybe it peaks around 415 to 417 on Monday or Tuesday. And then we are set for a possible rug pull for CPI. It might just happen, so I'd be very careful. Finally, I just want to note that the QQQ did what I expected. I told you guys this thing would probably pump too. It's up over 2%. Wide open MACD. Not really much of a divergence on this thing though. I am seeing a possibility like right here, but it's not looking that strong since the QQQ actually retested those same highs. So QQQ looks like it's going to pull back just a little bit. Might come down $1 or so and then just try to get one more pump or maybe just trade sideways from here. But then I do see it coming down likely after CPI. That's what it's looking like to me. The odds heavily favor that. If CPI is really low, then we could see the market just try to pump. But I just don't think that's going to happen. I think the odds favor downside soon. And here's the last thing for the VIX. I told you guys that the VIX had a clear bearish divergence. And what happened? The VIX got rug pulled. It's down 15%. That is insane. The VIX came crashing down. Exactly what I predicted. So now I'm thinking the VIX might come a little bit lower. I'm sorry, it might bounce first and then come lower. Because if it's down 15%, it typically gets a rebound. So we might see the market cool off a little bit on Monday. Then if the VIX fails, maybe rejects off the 200 EMA, maybe the 50 EMA, then we might see the VIX come down to finish filling this gap. And we might get one more pump in the markets for the final pump before CPI. So that's what I'm seeing as being the most likely case. The market pulling back a bit, then getting one more push up, and then a big reaction to CPI. Amazon reached my target. My target on Amazon was a break above 104, and I was watching about 106. It actually came a little short. I thought Amazon would hit 106. It actually stopped at 105.76. Aapl, I was telling you guys, Aapl will likely break past 172.5. If it broke that, I was watching 175. We actually came a little short. 174 is where resistance was. I was a little off there, but super, super close. Aapl did push up. It's up almost 5%. Not bad. It is losing some momentum though, so it might pull back just a little bit before it starts consolidating. Then we're going to get the big reaction after CPI. So anyways, guys, I'm going to keep it short. If you want more updates on different stocks, just be on the lookout for my Sunday video. I'm going to talk more about different stocks. For tomorrow, I might release another video about Elon Musk because he said something very interesting about the markets. And with that said, I want to thank you all for listening. Please have an absolutely spectacular weekend. Remain calm, cool, and collected, and I'll most definitely see you guys in the next one. The market to the moon as the long term is still incredibly bright, and peace out.